Hello, everyone. Welcome to today's webinar, The Evolving Fraud Landscape, Trends, Challenges, and Tools. I'm Bonnie Brodsky, Director, Payment System Improvement at Federal Reserve Financial Services, or FRFS. I'm joined today by my colleague, Amanda Compton.
Hi, Bonnie. Thank you for having me today.
In today's webinar, we will talk about what we do. We'll have a discussion about current fraud trends. We'll talk a bit about fraud educational resources and tools offered by the Federal Reserve, and we'll conclude with how to engage with us further on these topics and resources. So, a bit about what we do. First, the U.S. payment system faces dynamic, persistent, and rapidly escalating threats that make it easier than ever to commit payments fraud. FRFS, as both a payments operator and in its industry leader catalyst role, offers research, education, and a range of tools to support financial institutions in their fraud and risk mitigation efforts. As part of the payment system improvement and secure payments teams, we educate and engage the industry about key payment fraud topics such as check fraud, scams, identity and authentication, information sharing, and other topics. We keep track of current fraud trends, speak with the industry about the evolving landscape, and try to identify what pain points financial institutions and other fraud stakeholders are experiencing. We use this information to inform our educational resources, such as fraud mitigation toolkits, articles, and others. Additionally, we seek to lead and catalyze the industry on common fraud challenges. The Federal Reserve has worked collectively with industry work groups to advance payment security. Past work groups include the Scams Definition and Classification Work Group, whose goal was to promote a common understanding of scams and consistent fraud classification, as well as the recent Scams Information Sharing Industry Work Group. So, Amanda, having given everyone a better understanding now of what it is that we do, shall we chat a bit about the current fraud landscape?
Absolutely. Let's dive into it.
Awesome. So, first, let's look at the big picture. According to the 2024 Global Financial Crime Report by NASDAQ Verifin, losses due to fraud and scams in the US were 138 billion in 2023. Let's discuss some of the most prevalent types of payment fraud that are contributing to this overall picture, beginning with check fraud. So, Amanda, we consistently hear from the industry that check fraud is a major pain point. So, to start off, what are the key trends to be aware of when it comes to check fraud?
Well, as the Retail Payments Risk Forum at the Atlanta Fed reported this year, we continue to see check usage declining year over year, but the reported fraud attempts and the losses connected to check fraud are increasing. So this demonstrates that less check usage doesn't necessarily reduce fraud. And according to the 2024 Global Fraud Report that you had mentioned from NASDAQ, check fraud accounted for over $21 billion in losses in 2023. And it continues to be one of the top payment channels where financial institutions as well as businesses continue to experience increasing fraud attempts. And we've seen this in a number of different surveys, including the annual FRFS risk survey.
So, just to get a bit more into it, what continues to drive check fraud?
Sure. First, I would say opportunity. Even though the check usage is decreasing, there are still billions of checks in circulation each year, and these checks total trillions and trillions of dollars. So, in a large portion of businesses also report that they often pay other businesses by mailing them checks. So, this kind of leads me to the next one, which is check fraud's relatively easy to commit. Mail theft continues to be a very frequently discussed pain point when it comes to check fraud and stolen checks. Stolen checks can be altered. They could be sold on the dark web and in underground communities, and they're often targeted by organized groups of criminals. And the technology used to create fake checks is readily available and at a relatively low cost. The third, I would say, it can be pretty hard to detect fraudulent checks. The technology that criminals are using to make them appear very legitimate. It can make it very difficult to distinguish between a legitimate check and a fraudulent check. And detecting check fraud can be very manual and time consuming. Checks often rely on analog data, so automating some of that prevention and detection within this channel can be more difficult compared to other payment channels that may offer more digital data, especially if the technology is not prioritized. So, in addition to that, technology to combat check fraud may have competing priorities. So, for example, it may not be prioritized due to focus on maybe digital products and fraud.
Yeah, that makes for a really challenging set of factors to try to mitigate check fraud. So, what is it
Mhm.
that financial institutions can do to better mitigate check fraud?
Well, continuing to enhance their processes, their technology, and training their employees to prevent and detect fraudulent checks is a big piece of this. Another area would be helping their customers to understand the risks that are associated with paper checks, and then talking to them about the ways to use checks more safely. So, for example, checks should be aware, or I'm sorry, customers should be aware of how checks can be easily altered, especially if they're stolen from the mail or somewhere en route to that recipient. They can help prevent this by using gel ink that isn't easily removed, not mailing checks. If they need to mail a check, then using a secure envelope that disguises the fact that it contains a check. If a criminal steals a check, they can also attempt to impersonate the payee and forge the endorsement on the back of the check. It's important for customers to realize, checks contain account information that can be used for other types of fraud, including making counterfeit checks. And different check verification services, like Positive Pay, for example, can be helpful in mitigating check fraud as well. So, Bonnie, another issue we see here that continues to enable check fraud is scams and money mules. According to FTC data, reported scam losses in 2024 were $12.5 billion. This represents about a 25% increase from the prior year. So, why are scams so pervasive these days?
Sure, it's a great question, and they really are so pervasive. I feel like I receive multiple scam attempts a week, even sometimes a day. This
Me too.
morning, I received the unpaid toll scam text,
Yep.
which maybe yeah, I guess you've received as well. So
hmm
they really are so pervasive. And just to put things into perspective, scams are rail agnostic, so we encounter them across all types of payment rails and channels. And because scams are so frequently underreported, the scale of the problem is likely much larger than can be currently quantified. So, to your question, scams have become pervasive for a few reasons. So, first, they rely on sort of classic tactics of deception and manipulation to target victims, such as creating a false sense of urgency, building trust, using fear to motivate quick action. So with the unpaid toll scam text, they tell you that if you don't pay it immediately, your license will be revoked and you'll be subject to prosecution. So using that fear to motivate action and also dangling too good to be true offers in front of people. And anyone can be vulnerable to these tactics at any given point in time. Criminals are also able to target multiple organizations or individuals reusing the same tactic or scheme. So it can, it's easily repeated. And then lastly, automated attacks have helped criminals more easily scale scam attempts, while generative AI, has helped increase the quality of scammed content such that it has become, so much more convincing and more difficult to detect than ever was the case.
I love how you said anyone can be vulnerable to these tactics at any given point in time. I know someone who often says there's a scam out there for everyone, and it's so true. It's hard to accept, but it is so true.
Yep.
What do you feel like the different roles that individuals, businesses, and financial institutions can play in effective scam prevention and detection?
Sure. So, of course, education and awareness of common scam tactics and schemes are extremely important. And I think we would all probably agree that individuals play a role in seeking out their own awareness. Organizations can benefit from educating their employees and financial institutions, their customers. But it's not just about awareness, and there will always be instances where criminals are able to carry out effective deception and convince someone to make a payment or give up personal information. At the same time, there are a lot of things that organizations can do to protect themselves and their customers from the negative impacts of scams. So, for example, for businesses, it's about incorporating scam detection into internal processes and controls, and also leveraging technology and solutions, for example, vendor account validation. For financial institutions, there's a lot that they can do in terms of identifying suspicious incoming and outgoing payments, monitoring for mule accounts, and also improving internal scam reporting, among other strategies. I would say that overall, it seems as though the industry is increasingly progressing away from a paradigm where the responsibility of scam detection and prevention is solely on individuals and businesses. There is now a much greater acknowledgement not only of the important role of financial institutions, but also organizations outside of the financial industry, including telecom companies and social media, where scam content often originates. So it will be interesting to see how the role of these players and how they work together evolves.
I agree. I agree. When it comes to fraud mitigation, as an industry, we often reflect on what works and what doesn't work. Can we talk about that for just a moment with scams? What are you hearing in the industry about what's working to combat scams?
Yeah, absolutely. Many financial institutions are now communicating potential scam risks to customers in real time to help disrupt authorized scam payments from being carried out. And additionally, many financial institutions are using enhanced risk signals and machine learning to better inform the likelihood of a transaction being associated with a scam. And proactive intervention in cases where this likelihood is high, such as blocking the payment or carrying out some type of personalized outreach, can really make the difference in disrupting the scam.
Mm-hmm. I love that. That just in time messaging, really. So, hopping over to the opposite side of that spectrum, what's not working? Like, what opportunities are there to improve scam prevention and decrease that billions of dollars in loss and harm?
Sure. Yeah, it's a great question. And, one thing that we've thought about over the last few years is the lack of industry-wide information sharing, which remains a problem for more effective scam detection and prevention. It is true that information sharing does occur in various ways across the industry. Data consortiums being one example. There are also other examples, more informal types of intelligence sharing that occurs across different institutions. But overall, the landscape is very fragmented. And in the absence of industry wide sharing, it remains possible for criminals to repeat tactics and schemes across multiple organizations. And, of course, criminals are sharing information amongst themselves without any constraints. So, that's pretty big to be up against that.
Another trend we are hearing a lot about is account takeover. The 2024 identity fraud report from Javelin estimates about $15.6 billion connected to account takeover in 2024. And account takeover typically occurs when a criminal gains unauthorized access to an account. This could be either by impersonating the authorized party or using compromised credentials. So we know account takeover has been around for a while. It's not new, but the discussions within the industry indicate it is on the rise. So what do you think is driving this?
Yeah, it's a great question. So, there are several reasons why account takeover continues to pose challenges. Um, First, just tying things back to our last topic, scams are a key enabler for account takeover, as there are many scams that involve the use of phishing and impersonation to solicit personal information or user credentials. And recently, Gen AI technology has increased the effectiveness of phishing and impersonation, as I was mentioning earlier. And with this technology becoming pretty prevalent now, we see that phishing messages, which used to be really easy for users to identify because they were often filled with typos or grammatical errors or just sounded strange, it's no longer the case to be able to use those signs to detect a scam. You have large language models that are now being used to create highly polished content in any language that is extremely difficult to distinguish from valid correspondence. And this has made users more vulnerable to social engineering or providing personal information to criminals, thinking that they are a trusted third party. In addition to scams, Just generally, user data is more widely available now, and it's sold on the dark web for use by bad actors. This is unfortunately due to the fact that large scale consumer data breaches have become, almost a somewhat common occurrence. Credential stuffing or the use of stolen user credentials from one account to try logging into other user accounts or bypass authentication remains a common technique for committing account takeover. And the emergence of new AI tools to conduct credential stuffing more intelligently and on a greater scale also makes account takeover really attractive at this point in time. We also see scripted attacks becoming even more sophisticated, with bots able to perform increasingly complex tasks and activities, such as emulating user behavior more convincingly with mouse movements, typing patterns, or browsing behaviors, or augmenting malware in real time, just as some examples.
Yeah, account takeover is so harmful because of different ways that the bad actor could use the account once they're in it. In addition to making a payment like we typically hear about, they may also be able to take some of these other actions that we have here on the screen. So, for example, changing the contact information for a customer. This could potentially prevent the institution from reaching the valid customer to verify suspicious activity.
So, Amanda, to conclude our discussion of current fraud trends, let's last touch on the topic of synthetic identity fraud. So, a Federal Reserve convened work group developed an industry recommended definition of synthetic identity fraud, which is the use of a combination of personally identifiable information to fabricate a person or entity in order to commit a dishonest act for personal or financial gain. And we continue to hear from the industry that synthetic identity fraud poses challenges. One challenge is that it's pretty difficult to quantify losses associated with synthetic identity fraud. One industry report from Fiverity estimated loss exposure connected to synthetic identities at around 35 billion in 2023.
Yes, Bonnie, and losses attributed to synthetic identities can be hard to nail down, like you said, because they may hide in other loss types, such as credit losses if the synthetic identity goes undetected or if it gets miscategorized. And scams can also be used to help facilitate synthetic identity fraud, which bankinfosecurity.org estimates is about 85% of identity fraud cases. Gen AI can combine personally identifiable information that has either been made up or compromised, as well as create fake supporting identification documents to manufacture this whole new synthetic identity. And then Gen AI and bots can take that information and submit applications for accounts or loans. And if it gets declined, it can actually learn from that denial and adapt. And all of this is working together to create a profile, a credit profile, that helps to legitimize that synthetic identity. Now, criminals know to use the account to conduct seemingly legitimate activity, and so synthetic identities could sit on the books for quite some time before they end up getting identified. And then these accounts that were opened using synthetic identities, they could be used to transfer illicit money. They might be used to gain access to funds through various bank products or loans or credit cards, and then eventually abandoned. And synthetics are often reused across institutions. And they're frequently target vulnerable populations, which can make them more difficult to identify.
Thanks, Amanda. You made some great points, and it is, to think about those accounts sitting on the books for months or even years before, the criminal breaks out and using them is really quite something.
Hmm.
So to wrap up our discussion of current fraud trends, I wanted to ask you about something that has come up multiple times today as we've talked about these topics. And that's how criminals are exploiting new technologies to scale fraud more easily and efficiently. So, what are some helpful ways for financial institutions to think about fighting fraud against this backdrop of evolving technology?
Hmm. And as we've talked about, Gen AI is truly changing the scam landscape by making it easier for criminals to create that highly convincing personalized and scalable content, like those phishing emails you mentioned. It can also create fake websites and deep fakes. And then bots and scripted attacks can amplify the scale of the scams and other fraudulent activity by automating the tasks, like sending that phishing email or filling out those account applications. I will say though, even though we're dealing with this new technology, this is not the first time that the industry has had to grapple with the implications of new technologies for fraud. So being aware of how criminals are using it is crucial, but then also keep in mind that these are resources for your toolbox to help you mitigate fraud.
I really like that insight, and thanks for sharing your perspectives on this topic and all the others that we touched on today. So, now that we've talked about fraud trends, let's talk about some of the Federal Reserve's resources and tools that can help the industry combat some of these challenges. Do you want to take us through that?
I'd be happy to. So Bonnie, as you mentioned, one of our key purposes is to talk with the industry about these fraud trends and then create resources to help people better understand what's going on. We want to be able to share information about the resources available, such as these fraud mitigation toolkits that we have here. And these toolkits really bring that together into a one-stop shop to help people understand the trends as well as options to help them combat them. So I'd like to add that these resources can be used to train associates as well as help educate their customers. First, let's take a brief look at the Check Fraud Toolkit. The initial release of this toolkit offers easy to navigate modules that focus on prevalent types of fraud in the methods that criminals use to perpetrate it, as well as how check fraud can be prevented and detected. I'm going to go ahead and navigate to the site where we have the Check Fraud Toolkit available and then briefly walk through a few key pieces.
Great, let's do it.
Yeah, so here on our site, you can see the landing page for the Check Fraud Toolkit. On the right side here, you'll see there are 3 modules within our Check Fraud Toolkit. The first one covers the check fraud basics. The second one is covering check fraud schemes. And then the third one goes over preventing and detecting check fraud. I'm going to go ahead and jump into the first module of the check fraud toolkit, which covers, what is check fraud? Why does the type of check fraud matter? It discusses the primary types of fraudulent checks because this is a really good foundational understanding for understanding the schemes as well as the different methods for preventing and detecting check fraud. One piece I'm really excited about here is we have this test your knowledge section where you can click this link and go to an assessment that presents a check fraud scenario. And then once you review the scenario, you can select what type of fraudulent check you think it is. And then in addition to that, we have these downloadable resources at the bottom of the page and talks about types of check fraud, understanding check processing. These are really allowing the user to dive a little bit deeper into the topic of the module. I'm going to go back up here really briefly, but within module 2 and 3, you'll also see those same downloadable resources towards the bottom of the page that allow you to dive deeper into that topic. So for example, with module 2, we have the overview of different types of schemes, as well as some specific schemes where the fraudsters are really targeting different areas in regards to check fraud. Now let's look at the Scam Toolkit. This toolkit contains modules that focus on the fundamentals of scams. It has an industry-wide recommended definition, common types of scams, and why they're often successfully defrauding individuals and organizations. So let's go ahead and do the same, and we're going to hop over to the site and briefly explore the Scams Mitigation Toolkit. Similar to the Check Fraud Toolkit, you'll see there are 3 modules for this initial launch. The first one covers scam basics. The second one reviews the scam tactics and impacts. And the third one is on scam scenarios. Scam basics is where you'll find that industry-wide definition that we talked about. as well as why you should care about scams, the common examples of scams, and one of my favorite pieces is this visual of how scams occur, understanding the basics of scams. And again, similar to the check fraud toolkit is these downloadable resources that help the user dive a level deeper into the topic of that module. I want to also add that with this scam toolkit, we have two different types of interactive sessions. So in module 2, you can go to an interactive session that actually presents you with a scenario, and you can basically spot the scam. So you can look at the scenario and then determine whether or not you think it's a scam, and it'll present you with the result as well as indicators that either make it look like a scam or make it look legitimate. And then in this scam scenarios one, you can go and review a scam scenario, and then it walks you through the scam classification for it. So I'm going to visit that one really quick. So you can see here, you can classify whether the incident is a scam, and it walks you through using the scam classifier. So that really brings me nicely to the next piece on our site. We have several other tools too. So to help the financial institutions fight fraud, the Federal Reserve has worked with the payments industry to develop other tools like this that can help drive improvements to payment security. So the fraud classifier model that you see here on the left, it can help provide more consistent fraud classification and tracking within an organization, as well as improved fraud response rates due to having just a better understanding of fraud across different payment methods and types. And then on the right, just like what you saw on the site, is the scam classifier model. And this can be used for consistent and detailed classification of scams, which it can help support reporting, analysis, and the identification of scams, as well as attempted scams for more proactive mitigation. So now, Bonnie, I'm going to pass it back over to you to share opportunities about how to engage with us.
Sure. So, first, we wanted to highlight that in June of this year, three federal bank regulatory agencies, including the Federal Reserve Board, announced a request for information, or RFI, on potential actions to help consumers, businesses, and financial institutions mitigate risk of payments fraud, with a particular focus on check fraud. The agencies are requesting input on 5 potential areas for improvement and collaboration. They're listed here, but just to briefly review them: external collaboration among the agencies, Federal Reserve banks, and industry stakeholders; consumer, business, and industry education by the agencies and Federal Reserve banks to educate about payments fraud; regulation and supervision to mitigate payments fraud, including opportunities the board may have related to check fraud; payments fraud data collection and information sharing; and Federal Reserve Bank's operator tools and services to reduce payments fraud. We encourage you to submit a comment to this RFI. Comments are due by September 18th, 2025, so about a month away. The board will carefully consider all comments received and looks forward to reviewing the public feedback in response to this RFI. Additionally, we wanted to highlight several ways for you to stay engaged with the Federal Reserve's efforts to improve the payment system and fight fraud. You can visit FedPayments Improvement.org to check out our fraud mitigation toolkits and other resources. You can join the Fed Payments Improvement community for the latest news and perspectives on our efforts to advance the U.S. payment system. You can sign up for the Fed 360 newsletter, which will have a new fraud section beginning in September of this year. And as I just mentioned, we encourage you to respond to the interagency RFI by September 18th. You can scan the QR code on the right to submit a comment or learn more. And to sign us off, Amanda and I hope that you have found this webinar today insightful. Hopefully you now have a better understanding of what we at FRFS Payment System Improvement do to advance payment security. We hope that you have gained some insight into the current fraud landscape, have a greater awareness of the Federal Reserve's fraud education resources and tools, and can find us on these various resources presented here. Thank you so much, everyone, for your time today.